In this video, we will be starting with a new chapter, that is recording of transactions second. So this is a new chapter, and in the previous chapter we have learned about how to pass journal entry and how posting is done, and various rules and regulations which are related with the rules of debit and credit. This we have already discussed in previous videos. Now in this chapter we will be discussing about the recording of transaction second. Now important thing in this chapter is to know that what we have learned in the previous chapter regarding journal and ledger. We have discussed in the previous videos, that is in the previous chapter also, that recording of transaction is done in journal, and after journal the transactions are transferred, that is posted, means that is posting is done in ledger account. So here important thing is that the transactions which are recorded in the journal, earlier the journal was only one journal was there, which we have learned till now. Only one journal was there, which we have learned, that is all the transaction is recorded in one journal. But truly speaking, the journal which we have discussed in the previous video was related actually to for small business, that is okay, that all the transactions are recorded in one journal and thereafter it is transferred to ledger. But truly speaking, businesses are not always small businesses, especially nowadays the businesses are very large, and in this case the journal, which is generally it become very difficult to record, means not difficult, actually it is easy to record, but the problem arises that it is very cumbersome process is there, means it become difficult to record all the transaction at one place. And moreover, if we record all the transaction at one place, division of work also is not possible. So in order to enable division of work, in order that things are recording in a very systematic and smooth manner, the journal is further divided into sub-journal. The journal is further divided into sub-journal, or you can say special journal, or it is also known as day book or subsidiary books. The journal, this is further divided into special journal. Special journal, which is also known as day book also. Day book, or it is also known as subsidiary book. Subsidiary book. The journal is further divided into special journal, and it is also known as day book or subsidiary book. So there are various transactions which are repetitive actually in nature. There are various transactions which are repetitive in nature, and in order to record the repetitive transactions, a separate journal is created or prepared for repetitive transactions. For example, the various journals, first of all, let us see what are the various journal or special journal are there. These are cash, then purchases, then sales, then purchase return, sales return, then bills receivable book, and bills payable book. These are the various special journal, that is cash, purchase, sales, purchase return, sales return, bills receivable book, and bills payable book. So this cash journal is there. As we know, in businesses there are numerous cash transactions are there. Every time in a particular day there can be few transactions. From few transactions it may vary to thousands also. So there are repetitive transactions will be there. Many cash transactions will be involved. So all the transactions wherever cash is involved will be recorded in the cash journal, or it is also known as cash book also. Purchase book also. Book or journal, same, one and same. There can be various transactions which are related with cash in a particular day. So all the transactions which are related with cash will be recorded in the cash book. That is the transaction of similar nature are recorded at one place. Transaction of similar nature are recorded at one place. So cash related transaction will be recorded in the cash book. Similarly, the purchase book. Here the purchase book we record only credit purchases. Only credit purchases. The transaction. So in a business, in a large organization, business organization, there can be various transactions, various purchases. Means in a particular day or in a week there will be various purchases will be there. Number of purchases will be there. That is credit as well as cash purchase. If cash purchase is there, so it will be recorded in the cash book because it is related with cash. And if credit purchase is there, it will be recorded in the purchases book. So all credit purchases are recorded in the purchases book because transaction of similar nature will be there. Means every time credit purchase is there, it will be recorded in the purchase book. Similarly, whenever credit sales is there, it will be recorded in sales book. Credit. Because cash sale will be recorded in the cash book because it is related with cash. So it will be recorded in cash book. And if credit sales is there, it will be recorded in the cash book. And similarly, whenever credit purchase return and sales return is there, this will be again recorded in the purchase return book and sales return book. Bills received, bills payable book we will discuss later. So in this way, first of all, the transactions are recorded in the cash book which are related with cash. Similarly, all the transactions are recorded. And lastly, one journal proper is there. Journal proper. All the transactions which do not find any place in cash book, purchase, sales book, purchase return, sales return, or bills received, bills payable book, they are recorded in the journal proper. All transactions which do not find any place in all these books are recorded in the journal proper. Now, let us study first of all the cash book. How cash book is prepared. Cash book. Now, in case of cash book, there are two types of cash book, or you can also say three types can also be there. One is simple cash book. Simple cash book, or it is also known as single column cash book. Similarly, there is double column cash book. Double column cash book. And there can be one more way that is known as multi-columnar. C-U-L-M cash book. Means there will be more than 3 columns. Now first of all we will discuss about simple column cash book, or simply saying single column cash book, or simple cash book also is there. So in case of single column cash book, there is a single amount column. First of all, let us see the format of the cash book. It is almost similar to the ledger account which we have discussed in the previous video. The cash book will be, the format is very simple. Date column will be there, amount and folio. Here it is. Amount column, folio column, date column and particular. The ledger which we have discussed in the previous video, the column will be same as it is. Only thing, it will be written here instead of cash column, cash account, it will be written as cash book also. This is left hand side debit, right hand side is credit. Here first column is amount, then particulars, LF, ledger folio. Amount in rupees, again date, particulars, particulars, ledger folio, LF, amount and rupees. This is the format of a cash book, that is simple cash book. This is the format of a simple cash book or single column cash book, where the amount column on the debit side as well as on the credit side there is one amount column. On the debit side, this is the debit side, and that is the right hand side is credit side. One amount column will be there for cash and one amount column on the debit side also, and as well as credit side. So it is also known as simple column cash, single cash book or single column cash book. Since one single amount is there for recording cash on the debit side and for recording cash on the credit side. So that is why it is known as simple column cash book. Now let us see the transaction, how these are recorded. Let us see first few transactions. Let's just write out. Let us see. Started business with cash rupees 5,000. Let us assume started business with cash rupees 5,000. Now as we know that transaction, in this case the general entry will be what? Cash account debit to capital account. This will be the general entry. If you pass the general entry will be business started with cash 5,000, entry will be cash account debit to capital account. Now see, the cash account is being debited. Cash account is being debited here. So this is the cash book. So since cash account is being debited, so amount will be written on the debit side. This is the debit side, left hand side. 5,000 is being debited. 5,000 in the amount column will be writing, and we will be writing here to capital. Why this cash account is debited? Because capital is coming into the business. To capital account we will be writing 5,000. If date is given, then we will be writing the date. Since date is not there, so we are ignoring the date column. So cash account debit to capital. Since cash is debited, so on the debit side, this is the left hand side, this is debit side. In the debit side, 5,000 will be written, and why this is account is being debited, cash book is being debited to capital, because this cash is coming in the form of capital. So to capital we will be writing here on the debit side. Now let us see next transaction. Suppose next purchased goods for cash, say rupees 2,000. Now goods are purchased for rupees 2,000. Entry for this transaction will be purchases account debit to cash. Entry for this transaction will be purchases account debit to cash. Now see here, cash account is being credited, purchase is debited, and cash is being credited. Now since cash is being credited, so this amount in the cash book we will be writing this amount in the credit side. Since cash is being debited, so amount will be written on the credit side. In the amount column, 2,000 is there. Why this cash is being credited? Because on account of purchases. So we will be writing here by purchases. Now, I have told you earlier also, on the debit side we write the account with a prefix to, and on the credit side we write with a by. So if before purchases we will be writing by purchases. Everything whatever we write, whatever the account will be, on the credit side it is written with by prefix, and on the debit side it is written with to prefix. Now let us see some other more transactions. Suppose rent paid, suppose 500. Now 500 rent is paid for the building or whatever it is. Let's see. Entry will be rent is an expense, expenses are debited. Debit all expenses and losses. Rent is an expense, so expenses will be debited, and cash will be going out of the business. So if asset, cash is the asset. If asset increases, it is debited. If asset decreases, it is credited. Now cash account is being credited and rent is debited. Again, cash is being credited. On the credit side of the cash book we will be writing 500. 500 will be writing, and why this cash is being credited? On account of rent, because the rent is being paid. So we will be writing by rent account. 500. Sometimes it is also instead of this particular here. On the debit side it is written as receipt, and on the credit side it is written as payment also, because we pay cash book, here we are paying, this is the payment side. For purchases we have paid, for rent we have paid, and here cash we will be receiving, so in the form of capital. So sometimes it is also written as receipt also. You can write particular as well as receipt and payment column also you can write. Now let us write some few more transactions. Let us say sold goods rupees 2,500. Suppose you are selling goods 2,500. So cash will be coming in the business. Cash is an asset. If asset increases, it is debited. Cash will be debited to sales. Goods are being sold, sent to sales will be returned. 2,500, 2,500. Here cash is being debited. Cash is being debited. So on the debit side of the cash book, we will be writing this amount. 2,500 on the debit side we will be writing. Why this amount is? This is the receipt side. Why did we are receiving this? On account of sales. So on the debit side we will be writing to sales here. To sales. To sales account 2,500. Now this is one more thing we will let us assume these four transactions are there during a particular accounting period or during a particular month, assuming, and end of a particular point of time generally these accounts are balanced. So balance of when cash book is prepared, cash account is not prepared. One thing is to be kept in mind that whenever cash book or cash journal, book is also known as journal. Journal or book, one and same. Journal and book, one and same. Now journal or book, same thing. Whenever journal is prepared, then account is also prepared for that particular journal. Account is also prepared for that particular journal. So, but in case of cash book, this is a special type of book where when cash book is prepared, cash account is not prepared. Cash account is not prepared. For every book or for every journal, account is prepared. But for cash book, account is not prepared because since the balance of cash book can be known from the cash book itself. The balance of cash book, if it is prepared, so cash account balance as well as cash book balance will remain one and the same. So once cash book is prepared, cash account need not be prepared, or it is not prepared also. And this how this balancing is done. Let us see, it is important also, which we have to learn later on also. Then also, let us see. Debit side is total of debit side 7,500. Now, since total of debit side is 7,500, this is the receipt side. This much amount the business has received, 7,500 on account of capital, on account of sales. This is the amount which we have received. And payment side, let us see the payment side. Payment is how much payment has been made? 2,500 is the payment. Now, you have 7,500 cash in the business, and out of the 7,500 payment is 2,500 has been paid. How much balance will remain? 5,000 will be remaining. This balance is carried down after the end of the accounting period. This balance is carried over to the next period. So this is the balancing figure, the side which is having less total. On that side we write by balance carried down. Means this balance will be carried to the next accounting period. And what is the balance which will be carried? That is 5,000 will be the balance which will be carried during the next accounting period. Now the total will come to 7,500. This is known as balancing of account. This is known as balancing of account. And when this will be carried over the next period. Suppose your accounting year ended on suppose 31st December. 31st December, and suppose your accounting year was 2019. So on 31st December 2019, this balance will be carried over to the next period. And next accounting period will start with 1/1/2020. Next accounting year after 31st December 2019, the next date will be what? 1/1/2020. So on 2020 balance brought down. We will be bringing the balance brought down. How much is the balance for the new accounting period will be? That will be the 5,000. That will be the means end of 2019 the balance left in your account was cash book was 5,000. So on the next day, that is on the next day, that will 1/1/2020. Your balance in the cash book will be how much? 5,000. So this balance when it is brought down means to the next period, here we will be writing carried because it will be carried down. it will carry it forward, and this balance has been on one it has been brought down from the previous accounting period. That is why it is written as balance brought down. Since it is written on the debit side, so we will be writing here too. On the credit side, whatever it is written as by. This is known as balancing of account. Earlier the account total was different. Here it was 10,500 and here it was only 2,500. So balancing figure was 5,000. In order to tally the account, which make the account total both side equal, you have to write here 5,000. This is known as balancing of accounts.